Let me tell you the job I will never ever do is to be a group CEO. I've got nothing against it.
Where I come from, one of the things that we are told is you never sell land.
Yes.
When you buy it, you keep it for life.
Yes, you have 10 plots and you don't have liquidity and income. Those plots are not going to give the income. So decide, do you want to be in corporate, to be the corporate politician who is just, you're just staying around waiting for a pay at the end of the month, waiting to retire, which for me I think is a very sad story. Financial independence when your income that you get from your employment, you don't even touch a single shilling.
Because we also have a lot of people who don't understand what it takes to actually start a business.
Yes.
Especially unregulated business in a market which is not formed.
Yes.
Maybe you can just explain what you had to do.
Yes.
To make, I think from what I know, you started from nothing.
Yes.
And you made it into what, 20 billion?
Yeah. So I'll tell you the story
asset base?
Yeah. So let me tell you the story about
Britam.
We're calling it Britam Asset Managers. So we were number 2. Started from zero. As I said, went blank sheet of paper. So I had to recruit, of course, the first thing is we worked on a business plan, the model. So I had to recruit the first team of, we're calling them financial advisors. At the time, we're calling them financial planning managers. I recruited a team of 5. So they were to report in 2 weeks. So we start off. Guess what? A week before I reported, all of them turned down. They said, oh, this thing is new.
Oh, no.
Oh, no. Oh, it's new.
They want security.
Yeah. None of them. And I'd given them offers. So I had to go back to the...
None accepted.
None. So now I had to go back to now.
Again, you're on your own.
Again, I'm on my own. So I went to the pool. So now I started calling them directly and selling their vision. One-on-one. So I sold the vision to now a new team of 5. So let me tell you the story of those 5. All of them became CEOs. All of them. And if there's anything that gives me pride, is people who are recruited from down there.
Yes.
They have become CEOs while I'm still in the corporate, as it were, as a CEO.
Yes.
In fact, there's a gentleman who went to, very, very good gentleman, he became a CEO in Uganda and also became a CEO of stock brokerage here.
Yeah.
There's CEO of a health insurance business, Jerry Njomo, used to work with her.
Jerry was among the 5.
Jerry was among the 5.
Wow, fantastic.
And she's really, and then
she's done well.
Yeah, there's a wonderful lady, Joyce, who is also a CEO. All of them reported to me.
Yes.
There's another one who is also a CEO. So there were 5 of them, all became CEOs. So the pride that I have, this is the initiative. Remember, I had nothing, so I was holding the vision.
You only had a vision.
Yeah. So
and that's what you saw.
Yeah. So they came, we started, and we worked so hard.
Yes.
We developed products. We had to market everywhere we were going. People were telling us, oh, Old Mutual has been here. And then there are people who were throwing mud at us. Those are small.
Who are these guys?
So the story is, we grew. From the day we launched our products, it took us 6 years to become market leaders. We were number 1.
6 years.
We were growing at 141% per annum.
Every year.
Every year.
Wow.
By the time I handed over the business to the next generation, we were managing 20 billion. We were number 1 with 33% market share. Old Mutual had moved from 898 market share to 27.
You had taken significant share.
Business was working. It had contributed to it. Completely transformed Britam. Yeah, Britam now started actually growing.
Yes.
And phew, it just took off.
There must be something that you did right.
Yes.
To take business from such an established player.
Yes.
Would you like to give us 1 or 2 tips?
Okay, so let me say this. When we started Britam Asset Management, we're very lucky because we leverage on the Britam brand.
Yes.
Britam was very, very strong in distribution, if you remember.
They were strong in insurance.
Yeah, they were strong in insurance.
They had a strong brand.
Exactly, insurance. But remember what made them strong? Insurance retail, because of distribution.
Yeah, the distribution network.
Exactly. So I learned distribution from actually when we were building Britam Asset Managers. So we had a very strong distribution network. We leveraged on the brand. Of course, we had the capital.
Yeah.
Because you need, regulated business, you need substantial amount of capital.
Yes.
Yeah.
Yes.
So
yes.
I would not advise anyone to start regulated business without a substantial amount of capital.
Yes.
Yeah. And,
wow.
and if you don't have brand, it's about trust.
Yes.
You want to build this trust, so you better just leverage on sort of brands that have established a trust in the market for very long. Yeah. So Britam was a very good run. Yeah. Of course, the usual challenges, and I moved on after handing over a fantastic business, which was doing very, very well.
So where did you go next?
So after that, so I got.
So that's after how many years?
So I was there for almost 8 years.
7 years.
Yeah, it was a very good run. Yeah. So I got approached by UAP then. Now it's Old Mutual. So one of the directors of UAP called me once for lunch and said he wanted us to have a chat. So said no problem, we go and have a chat.
A director.
He was sitting on the board. As somebody who he's well known in the market. So he was sitting on the board. So he told me, let's go and have lunch. So we had lunch, we were chatting, and then he dropped the bombshell and said, oh, you know what? UAP is looking for a successor to the then group CEO. I looked at him and I said, UAP, that's small business. You think I can go and work there? I almost laughed. I said, that's a joke. But then I thought to myself, this is a group. So I started now researching about UAP. Yes. I discovered, my goodness, these guys are doing big things. They don't talk about it. They had operations in South Sudan, didn't even know. They had operations in Uganda. They were doing building. There's one coming up now. It's called the Old Mutual Tower. Yes. And then when I did my research, I discovered this is a deputy group CEO role, and I'll take over from the group CEO. I said, so I joined UAP. I was bold enough.
Yeah, that's a very interesting point, Dominic, because a lot of executives, especially, they struggle with taking opportunities. Because you are in this job, someone is offering you another one. So what are the deciding factors for you now to decide, am I moving to UAP or not?
Okay, no, that's a good point. But I must say, moves are usually risky. I mean, it's not to say that they're not. Because remember, where you are, you already have your network. Yes. Because I discovered UAP.
You've established yourself, you understand the business.
Yes. One of the challenges they face is I went there, I didn't have the network. And of course, there were people who had been there very long. So this person knew. So there's a lot of politics, which I managed. So you've got to be strong, you've got to believe in yourself. My view has always been, unless you get out of your comfort zone, you're not going to grow.
You're not going to.
You'll just be there. So decide, do you want to be in corporate, to be the corporate politician who is just, you're just staying around waiting for a pay at the end of the month, waiting to retire, which for me I think is a very sad story. We should be in places where we make a very huge difference. True, you should just not be there because, jobs give you security.
It's impact fast.
Build also your security, your savings, investment, etc. But make sure what you're doing is something you enjoy. And the day you don't enjoy what you're doing,
you are creating impact one day.
Exactly, create impact.
And you enjoy it.
And you enjoy it, So I would encourage, if you've got an offer and the offer is going to stretch you, and you finish what you've done, because the other thing I tell people, don't be a job hopper. Today you're there for a year, following year, because you get offers
somewhere else.
That's like I get offers all the time. Perhaps somebody wants you to work for them, they see your profile, they want to give you the whatever. Try and finish what it is that you're doing. Okay, make sure it's with the end. Like for example, in Britam. Britam was very, very successful. Britam Asset Managers. Before I decided to take, the plunge.
But you've left a legacy.
Exactly.
You said I built the business from zero to 20 billion.
To market leader. 20 billion.
Market leader.
Yes. So
that's something.
So you need to also be bold. Don't be afraid to take risks. I keep on telling people, once you're in that sort of C-suite, you're always taking risks, even in business. Some of the push that I find you have with boards is you have an idea, you want to have a business, sometimes the board is so conservative, but if you're running a business, you have to take calculated risks to move.
True.
So a good example is if for example, the founders of Equity Bank didn't take that risk to set it up, the transformation that has happened, which by the way, if you look at generation, this is a once-in-a-lifetime transformation. Because I know the equity story, and I keep referring to it.
Yeah.
That transformation would not have been there. But there were people who took calculated risk.
And risk, yeah.
Just like yourself in your career. And the day you think that, let me hang on to this job because it's safe, there's nothing like safety in a job.
You lose it.
Boards can turn against you. Boards can see you underperform, and guess what? You'll be shown the door. I have seen so many CEOs being shown the door, even C-suite people, because you didn't deliver. So make an impact, deliver, but if you feel your time has come, make the bold move. Because what is it that you lose? And what are you afraid of? So conquer your fears.
Yeah.
But unless you make that move, you're not going to grow. So yes, I'll encourage. So just weigh. I think the biggest fear is this security. So sort out your security issues from your investment, etc. But in terms of if it's giving you growth, go for it.
Yeah, okay, that's great. Actually, there's a quote that says that when people quit on time, it will usually feel like they are quitting too early because it will be long before they experience the choice as a close call. Success does not lie in sticking to things. It lies in picking the right thing to stick to and quitting the rest. Do you agree with that?
Very much so.
Yeah.
Very much so.
That's great.
Yes.
Okay, so now you've done UAP.
Yeah.
How long did you do that?
UAP, I was there for 4 years. So I joined as deputy CEO for 1 year, and then I got promoted as a group CEO.
Wow, that was too fast.
Yes, but I delivered.
Yes.
Yeah, I've been a big man in this town.
And there was no even dispute. Dominic is the next CEO.
But I knew I'm going there because I was to go to the CEO. And
that was your eyes on the ball.
Oh yeah, there was a bit of, say some, even when I joined, my title at deputy CEO. I said I am deputy group CEO.
What?
I was very clear. Me, I'm
not just deputy CEO.
So I did that stint. I mean, it was wonderful. I mean, I must say, I was fortunate. You remember the late. For me, it was this was a business run by entrepreneurs. The late Dr. Joe Andrew, who have a lot.
He was
of
the chairman.
He was a chairman.
Yeah.
Oh, he was. He was cut above everyone.
He was great. He was a great
He was
entrepreneur.
great. I have never seen very, very few. I remember he was trained in the US.
Yes.
So this guy, he was a thinker. He never focused on small things. And because me, I have problems people focusing on big things, not worry of small things. You fight over politics here.
Yeah.
Those are things that pull you down.
What's going to move us forward?
What's going to move us forward? So I was very, very fortunate. He was my chairman for close to 4 years. So you can imagine the kind of knowledge and skills I had. Now you have people like James Mugoye, who was very, very strong.
He was the CEO before you.
I took over from him.
The group CEO before you.
Yeah, and then there was the late Chris Kirubi. Who forget the late Chris Kirubi? I mean, Chris Kirubi was a phenomenal entrepreneur.
Yes.
Very, very driven.
Yeah.
You can imagine I sat on all board meetings with him. So I know how he thinks.
The learnings.
Oh yeah, that was transformation. Yeah. Now Chris, the late Chris Kirubi, and may his soul rest in peace, was fantastic.
Yeah.
I learned a lot from him as a businessman, and these were greats. I can tell you. In fact, I hope their books are coming out soon, so the next generation can actually learn from these titans. So I was very fortunate. So I was a group CEO, and this. So when I joined UAP, we were in 3 countries.
Yes.
Kenya, Uganda, Tanzania. I joined as in the group. So my job was to expand the business into other countries.
Into Africa.
Yeah, the rest of Africa. By the time I left, we're in 7 countries. So I grew a country each year.
From 3
to 7. Yeah, so amazing. I was involved in Tanzania. That was an acquisition. And then after that, Rwanda. That was a greenfields. We tried an acquisition. It didn't work. We did a greenfields starting from scratch. We did DRC, set up a brokerage.
Wow.
And Zambia. We're just about to close a deal in Zambia.
Yes.
So I remember I used to travel quite a lot. Yeah. So it was very phenomenal. I used to attend almost 350 board meetings in a year.
Wow, that's a lot.
I keep on telling people, if you have a group, invest in a private jet.
I also did that in my role, and it's not anyone's cup of tea.
No. I say.
But you grow.
You grow. I know my passion. My passion is building business. And it was great. I built this group.
Yeah.
Where I learned a lot. I remember Kampala when you were opening up Nakawa. I was the one taking the president around.
Nakawa is the local market.
No, Nakawa Business Park. You know Nakawa Business Park? It's in Nakawa.
It's in a place like Yekomba.
Exactly.
In Nairobi.
Yes. So we did big things. We did this tower, the Old Mutual Tower.
Yeah.
I was involved in it from beginning all the way to the end.
you also did South Sudan.
We did South Sudan,
Juba.
the biggest tower.
Yeah, because we used to find you there in UAP.
Yes.
Yeah.
No, it was.
And you built even some real estate.
Yeah, we grew. I mean, by the time I left, the business was extremely profitable.
Wow,
yeah.
that's
So
amazing.
I did my mark and managed the group politics.
Yes, it sounds good. Okay, but sometimes you also say that opportunities come disguised as an issue or as a problem.
Yes.
So some people would have seen, they are checking me out, they've picked somebody else, but you saw an opportunity to get into something else.
Yes, so I knew since I couldn't continue with that path, so I had to look for another path.
Yeah. So tell us, what was this? What did you do?
So when I finished that, so I decided to obviously take a bit of a break. There are a few entrepreneurial ventures I was involved in, which gave me a lot of insights, a lot in terms of fundraising, and how investors, what to do, what not to do. And then I was also involved in a real estate project, real estate development project, which was very, very insightful.
Okay.
And then of course there was COVID.
Was that a startup also?
That was a startup. Yes. But it was focusing just on a project.
On real estate.
Yeah, on real estate. It was a large multi-family real estate. So. Of course, COVID came, though, the usual challenges, raising capital, etc. But there are a lot of learnings, But there's a team that, obviously continued with it, and there's a partner that we're engaging, and it should become completed.
Okay.
So there were a lot of insights, I think, during that period, and I'll say that was the entrepreneurial phase. I think for me, the insights were around how does this market work from a sort of capital raising standpoint?
Perspective.
If you're starting a venture, what problem are you solving?
Yes.
Is there a demand? What you're doing? And I think for me it gives me skills, a lot of skills around what I call alternative investments. Because even these things I was doing in terms of real estate, all those alternative investments, all these ventures, the digital financial stuff, all these alternative investments. So right now, I'm in a space where I can be able to mobilize institutional capital and direct them towards alternative investments. So in fact, one of the big things, in fact, it's the reason why I joined Jubilee Asset Management about 2 years ago, is to now help them, of course, grow as an asset management firm, but more importantly, drive this alternative investment sort of agenda, more around creating the assets, pooling capital from other, pension funds, etc., and in deploying this capital into very, very good opportunity and alternative investment. And because I've been there, on the asset creation, I believe now I can do a fantastic job on this other side of managing, mobilizing capital and managing those assets, because I understand how those assets work.
You've really gathered the insights, the knowledge, and the experience.
Absolutely.
So, Dominic.
Yes.
You've left UAP Group.
Yes. Now Old Mutual,
Now where are you? Now what next?
Okay, so once I did those projects, so in December 2022, I received a call from the Jubilee Group.
Jubilee.
Jubilee Group. So they said they're looking for a CEO for the asset management. At the time, it was called Jubilee Financial Services.
Yes.
So I told this person on the call, first of all, I asked her, who gave you my who gave you my contact?
Yes.
Because at the time I was, not looking.
You are not in the market. Really.
Yes. I was doing my own little projects. No matter how long they took, I knew, time will come and everything will be sorted out.
Yes.
But I said, look, I'll get you. Let me think about it. But I'm going to get you a name of someone.
To refer somebody.
So when I reflected on it, first and foremost, it came to my realization they were looking for a leader for an asset management. I was very intrigued that they didn't have the group did not have a fledgling asset management firm. And at the time I had done quite a bit, my projects had more or less, I'd spent all I could, and what was remaining, other people could take it and make sure it's completed. So I felt that I had a bit of time, and because it was really positioning an asset management, I felt this is a blank canvas.
Yes.
So let me take the challenge. So I decided I'm going to take the challenge, help the group to establish the asset management business, to make sure it's a market leader.
Okay.
So I joined in December 2022. So the first thing I did is we had to come up with a new strategy for the business. It had a team of 8. It was managing 20 million shillings in terms of 20 million for the retail. The retail side 20 million, but it was managing about 115 billion for institutional. So retail, we had only one product, the money market fund. So from a team of 8, there's a lot of building foundation of the business that we did over the last 26 months.
Yes.
So we've set up the foundation. So fast forward now, we have a team of close to 50.
From 8?
From 8.
Wow.
The 8 actually, most of them actually all left. So I'm now the oldest in the team.
Yes.
But I've rebuilt the business from the ground up. It's now extremely solid. Last year, from the 20 million on retail, we're now managing close to 13 billion shillings.
From 20 million?
Yeah, just in a span of 26 months. We introduced new products.
Yes.
We introduced a money market fund, USD, which is one of the fastest growing USD funds. So the business has done very, very well over the 26 months. And for me, it's just based on the things we've done, the foundation we've built, recruiting a team that is dedicated to the business, but also doing what we know how to do best, and that is offering investment products and services, and being the financial services partner to all our clients. So we have clients across, all retail, from high net worth to the mass market to retail investors. So the business, I think, is doing extremely well, and we expect it to be generating very, very strong revenue and profitability going forward. Yes.
Now, I want us to talk financial health.
Yes.
To be honest, it's a concern to me when I look at the data. For instance, the data I have, and you need first of all to confirm to me whether it's correct. It is seeming to suggest that in the last few years, from 2019 to 2021, our financial health has declined from 21.7%, which was still a bit low, to 18.3% in 2024. 2021, it was 17.1.
This is the saving rates?
Yeah, the savings. Generally, even the ability to support our livelihoods. We are talking about the general financial health.
Yes.
Am I able to pay for my basics? Am I able to, which is a pointer to our savings culture, our preparedness for the future, and meeting the demands of day-to-day requirements and all that, savings and all that. The ability to invest in livelihoods has also declined from 21.8 to 17.1. Now, when you look at the level of pensions, for instance, it's only at about 11.8%. Securities investment is 3.1. So is this telling us something? And what I want you now to tell me is how are you advising the market? How, if I was a customer, for instance, what conversation are we going to have? I know you like talking about the life cycle of investments. Maybe you need to tell us something about that, so that now we all are able to examine ourselves and see where we are and what we need to do.
And that's a very, very important point. It's very, very important to build savings, and it is very important to build wealth during our working lives. I think the thing to realize is that we have limited time within which we have energy to earn an income. And the time you are earning an income, we must make sure that you are investing sufficiently, so the day we stop earning that income, our investments can now generate income for us and support us. That is so fundamental. Otherwise, you're going to get into financial problems. You're going to get into real poverty. And we've seen in this country, because of the low saving rates, people retire and they become poor. So they're depending on their children. So, which is okay. The children, if they've got the means, they can provide. But I can tell you, there's going to reach a point where there's a generation. So, for example, like I see my generation, maybe generation behind us, where you have small family sizes, maybe the kids will be out of the country. They may be sending you the money, but it is time we start planning. How do we look after ourselves once our income earning years are gone? Okay?
There's a problem there, because if we depend on our kids, our kids are also starting their families.
Exactly.
and they have their obligations.
Yes.
And they also have their futures to build.
Yes.
So even if they wanted to support us,
they might not be able to.
And we also used to a certain lifestyle.
Exactly.
Aren't we?
Yeah.
Yeah.
And that's what the point should be. We need to plan for ourselves.
To
sustain ourselves. In other words, when my earning years are gone, I should not be going to my son or my daughter and saying, you know what, can you help me? Or, or I've fallen sick, I need help. We need to plan for ourselves, because the reality is our years of earning an income will come to an end.
Yes.
Based on the skills we have.
Naturally. Yeah.
Naturally. Once they come to an end, have we saved enough and invested to have an income that will support us? That is the first starting question. And the second question is, as we grow older, our health needs will increase.
Yes.
Because we're becoming frail, etc. What are we doing to plan for those costs?
Yeah.
Or are we relying now on our children, as you're saying?
Yeah.
They may not be able to do it.
They may not be.
So I think the first starting point is...
how do we build that financial security?
Yeah, and that's a very good point. So we need to start from the very beginning. So we all go, when somebody is born, he goes through a life cycle. You're born, you're raised, by the time you're 7, you're 8, you go to school. Once you go to school, you finish your schooling, by the time you're 18, if you go to college, maybe 21, you start earning an income, okay? So your income earning years normally begin from 18 to about 21. You earn an income. If you're working in corporate, there's something called retirement. One day you'll be told, oh, you've reached this age, so you can't work anymore.
Yes.
And that is about 60,
yes.
or in some cases 62.
Yes.
So what are we supposed to do as we go through this journey from we are born, we are 7, we are 15, we are 18, 21, between, let's say, 18 to 30, I'm starting to earn my first paycheck. What should I do with it? Should I go and enjoy life? Which is, there's nothing wrong with it. But from a savings point of view, what should I do? And between 30 to 55, what should I do? 55 to 65, what should I do? So that life cycle, I'll group them into 4 quadrants.
4.
Yeah. 18 to 30, 30 to 55, 55 to 65, and 65 beyond.
Yes.
Okay, those are 4. The first quadrant, when you start earning 18 to or 21 to 30, the first thing you must do, you must understand the concept of savings. So you don't earn an income, money comes, money goes. You're going to be in problems. Once you earn an income, the first thing you must do is pay yourself. So people wonder, oh, but I'm getting a pay. No, you're not getting a pay.
I reward myself.
No, you pay yourself. you receive the salary. You pay yourself by investing. So what do you do? You start from the minimum should be 10%. Whenever you get your first paycheck, 10% you pay yourself.
Yes.
That first paycheck you've not been paid. There are bills to pay.
Yes.
Yeah, or even if you're going out to socialize, you have to pay yourself first. You pay yourself, minimum should be 10%. You pay yourself by putting that money aside.
Yes.
That is saving. Learn what saving means. Saving means you put money aside, and it also means you work within a budget.
Yes.
So between 18 to 30, you must learn about budgeting. You must learn to live within your means. You must learn to avoid debt as much as you can. You must learn on how to save, and you must start saving. You start with 10 of your income, you keep on increasing. So your target should be to achieve financial independence. When do you achieve financial independence? And this is when people get confused. You achieve financial independence when your income that you get from your employment, you don't even touch a single shilling. Because all the money you've been putting in your savings, which you invest, generates an income sufficient to meet your expenses.
Yes.
Now you've achieved.
So the principle is secure.
The principle is secure. So in other words, you don't even need to touch your salary.
But the income coming from the investment is supporting your day-to-day.
Exactly.
expenses.
So that's what you should do. So you start by saving 10%, you go to 15, you go to 20, 30, until you have a pool of capital where the investment income is sufficient to meet your expenses.
To run your expenses.
And then you start again.
Wow. Wow.
So you have one pool, now you start another pool.
And the principal continues generating more and more.
Exactly. So within 18 to 30, that's when you start the discipline of saving. You start now saving.
Yes.
You create an emergency fund. Emergency fund is a fund that can meet 6 months of your expenses, 6 to 9 months.
6 months.
Yeah, 6 to 9 months if your job, you're transitioning jobs, etc.
Yes.
From 30 to 55.
Yes.
You now start building wealth. You continue with the saving, but this saving, you start putting money in a money market fund, like the Jubilee money market fund, and you make it automatic so you don't forget.
So you pay the money market fund before you start going out.
Exactly. So you pay yourself through a money market fund.
Yes.
You pay yourself and you make it automatic. So every month, 10, you say this year 10%, next year 20 of your pay, the following year 30, until you reach 100%.
So what I'm hearing is that the first thing you need to overcome or that you need to create is the discipline.
Exactly. It is a discipline. It is a discipline. It's a discipline to save, a discipline to have a budget, to live within your means.
And go as per the budget.
And go as per the budget. Never ever exceed your budget.
Yes.
And my view has always been, we need to start teaching people when they're young, when they're sort of from age 7.
Yeah, when they're in school.
From 7.
Yes.
Teach your kids about savings and investing. You'll be surprised. These guys are very smart. They start learning.
Yes.
Teach them about how to earn an income. So by the time they're 18, between 18 and 30, that is a golden age for them to have started the discipline.
Yes.
Now from 30 to 55, now you are building your wealth. So you start now expanding your portfolio in investment. From money market, you buy those plots.
Yes.
There's nothing wrong with plots. Buy them. Because they're going to appreciate, isn't it?
Yes.
Yeah, you have a plot.
The value is going up.
Value is going up. 30 to about 45. Buy those long-term investments. Put money in shares. But save and invest.
Yes.
Save and invest. Save and invest. Manage your risk. So when you reach 55, that's when now you start thinking of the so-called retirement planning. So what is my third act?
From 55.
From 55. 55, you know, if you're in paid employment, it's going to end in 5 years.
If it has not already
If it has not already ended.
You are restructured or early retirement. I took early retirement.
But I keep on telling you, you never retire. You're not in your third act. You're doing something very enjoyable. So there you start now reorganizing your portfolio.
Yes.
If you've got debt, pay them off.
Yes.
If you have a lot of things in now, those plots, start selling them.
You take the profit out of them.
You take the profit, put them into liquid.
Create liquidity.
Exactly, create liquidity. And that's the biggest challenge I think we face. What I've seen, there's a lot of wealthy people.
Yes.
But their wealth is tied up in liquid assets.
Yes.
I have big plots there, and there's nothing wrong with that. But you have liquidity.
And you don't have income.
You don't have income. The critical thing from age 55 to 65, reorganize your portfolio.
Yes.
Make it more liquid, make it more safe. If you've got debts, pay them off. Make sure now you're targeting your income that's going to live on when your income earning years are over. Because they'll be over. And then when you hit 65...
Dominic, no, before you go to 65, I think we need to hit the bull by the horn. Hold the bull by the horn. Where I come from, one of the things that we are told is you never sell land.
Yes.
When you buy it, you keep it for life.
Yep.
Maybe that's why we are landing into a lot of liquidity problems.
Yeah.
Do you want to talk about that?
No, I want to talk about
just a little
look,
bit.
and also go through that. I mean, as I say, I'm from that community, and I know some of the discussions I go through, encouraging my folks that there's that asset there liquidated. It's not an easy conversation.
Yes.
But we have to do it. We have to do it because yes, you have 10 plots and you don't have liquidity, an income. Those plots are not going to give the income. And please, this is an advice. Don't start doing projects when you're over your 65. And remember, the one thing people don't realize, when you reach age 50, your cognitive decline starts. Cognitive decline means your mind is no longer as it speaks. Sorry to to surprise you.
No.
You start cognitive...
Dr. Edward Odundo was here.
Yes.
And he actually talked about it.
Yes.
how our mind starts now behaving.
Yes.
After a certain age.
Absolutely. Yeah. So you have cognitive. So if you start making tough decisions at 65, you're bound to make errors or judgment. That's the time you should be sitting in boards.
Not like when you are young and you could also take risks. You also had time to take risks.
You take and time to self-correct. At 65, if you did not start that project, don't start it at 65.
At 65.
If you did not, what you do, use your wisdom and now help the next generation. Your time is up. Yes. When I mean up is, that's not, you can do small projects, but not these big ones involving raising capital, etc.
Serious decisions.
No, that's too late, because if there is an error, your room for self-correction is limited. You can imagine at 65, you're going there, you're taking a bank loan. What about if things go south? You're done. Yes. And I've seen people in serious financial crisis because of that. Yeah. So anyway, I think the idea of assets is good. What we need to do, we need to go to the next level. How does my portfolio look? You cannot have a portfolio, it's all illiquid assets. So it is not helping you. It is nice in a conversation, you know, I have this, I have that, I have this, but at the end of the day, the portfolio is there to help you.
Yes.
Does it have, make sure you structure it, there's income to meet your day-to-day expenses.
Yes.
In case you're sick, and as we grow older, definitely we're going to be sick. Make sure there's that income.
You can't avoid it,
Exactly. So you have to restructure your portfolio. When you're 30 to 55 years, have as much illiquid assets as possible. But when you reach 55, start consolidating that plot that is there. Yes, you should not sell it, but if you sell it, you put money in a money market fund. Money market funds are very safe, very safe.
They'll bring income.
And remember, it will grow faster than that plot.
Yes.
But you have liquidity. If you have an emergency, you get it from there.
You can get from
Exactly. So we need to restructure our portfolio to make sure that we reduce the liquid, make sure 60%, when you're 55, 60% of your portfolio is liquid and safe.
Yes.
Yeah. So that's amazing. But if you look at some communities that have land, my goodness, the liquidity they have, it's amazing. Somebody can actually sell a house in some of these suburbs.
Yeah.
He puts the money in the money market fund.
They don't need to do anything.
Yes.
They make money when you are sleeping.
Yes. So you go and tell somebody, you've got this beautiful house in that suburb, you want to sell it. They'll tell you, Mary, are you out of your mind?
They'll think you are crazy.
And yet, all you've done, converted a liquid asset
into a more liquid asset.
Absolutely.
Yeah. So and you enjoy the income forever.
Absolutely. Yeah. So we need to do more of those things. We need to think about our portfolios.
Yes.
Is it working for us?
Yes.
Yeah. So that we don't struggle with our day-to-day needs.
Yes.
Yeah.
I hear the compounding has been described as the sixth wonder of the world.
No, it is.
And you need to explain why.
Power of compounding is the sixth wonder of the world.
Yes.
People create wealth from saving. Saving is, I would say, 30% of the wealth creation. So if I invest 1,000 for 30 years without fail at 12%, you see initial investment, my initial investment is 360.
Yes.
That is the 30%. The 70%, my total investment is 2.38 million. 2.38. So that increase, or 2.38 minus 360 is almost 2 million.
Yes.
It's from compounding.
On year 30, so assume you started this at 20 years.
Yes.
1,000 only.
Yes.
At the end of, when you're 50, you will have your almost 4
million after having put away.
Somewhere.
Exactly, after putting away.
Still growing.
Exactly.